We are being live streamed on the YouTubes now. And I stopped sharing my screen. Where's my screen? I'm all over the place right now, guys. I'm just so excited. It's our quarterly check-in with our good friend, the pivotologist, the Cookie Monster. Cookie, great to have you.
Good to be back. Thanks for having me again.
Thanks for taking some time mid-session here with us, and always GP's with me. But we're missing our third amigo, Nick. Hopefully he's back soon. I know he's got some time with family, but let's just jump right in. And I'm going to get this shitty XBI chart off the screen here. We'll go into that later. But Cookie, want to jump right in with the SPY and how you think things have changed since the last time we talked a quarter ago.
Oh, man. Yeah, nice easy one to start with. I think we could talk a little bit about the environment first if you want. You want to do that? Like the mood and stuff?
Yeah.
I mean, we were just commenting on this before we started the call, and it's been like doom and gloom for months. And as far as price is concerned, we're in the same place as we've been since forever as well, right? I mean, you look at that SPY chart. What you got there, Hood?
Yeah. Sorry, I'm cleaning things up.
So, I mean, sentiment has been in the same place it has been for months, and price has been in the same place it has been for months as well. So, I mean,
don't you think sentiment's a bit worse now?
I think it bobs between like extremely pessimistic and generally bearish. Okay. It's never really turned bullish. But I agree, you're right. I think there's a lot more fear now. But people often share that fear and greed index, the chart there. Yep. And we're at levels that maybe are consistent with October lows or the June lows from last year, maybe even further back than that. But we end up down at these levels every 3 months. And I was just talking to, just commenting to Holding Bags before the call, how rhythmic and periodic this market is. And every 3 months I'm on, sentiments in the gutter. and we're looking for possible clues to how we could get out of this hole, right? And I think the SPY chart summarizes that really well. You look at price there, it's just in the same band it's been in since June last year.
Yeah, and I think, speaking of the way you described, it's opposites, right? Like everybody's extremely bearish, everybody's extremely bullish, and we came from a period of, I mean, let's just call it what it is. The entire early part of the year, while there was still a lot of fear, sentiment became, got better, and it almost got euphoric, I think, to some degree. On the bullish side, you're never going to convince the miserable bears to switch their sentiment. And then we have this cooling period that we're in for the last 3 weeks, which I don't necessarily see as a catastrophe in sentiment, but the polar opposite of everyone being bullish a month ago to now sentiment shifted the other way. The pendulum shifted the other way. It's just, jerking from one side of the road to the other, right? You're hitting guardrails. And I think one thing that we like to do, right, GP, is you've been more bullish than me, certainly, but we kind of keep it neutral. And Cookie, I think that's one thing I really always respect about you is we're open to different scenarios. And when price action tells us something different, we have to be willing to pivot on what price action's telling us. And GP, I thought you said something right before we started the call was, what's price action telling you right now?
Yeah, so that's that. So what I was saying is for me, I'm a little worried that I'm not worried enough, right?
Right.
It's literally everyone and their mother that are on Talking Heads and all that other stuff talking about this is just starting and we got the catalyst, and then I look at the catalyst and I'm like, this catalyst doesn't make any sense to me, right? It's U.S. freaking Treasury isn't like it's not worthless paper like 2008. But okay, I get it. It's similar kind of insolvency and credit crisis that's happening here. But that's like I'm like always like because when you're doing this for a living, it's got to see both sides, right? You can't just sit one side, otherwise you're not going to survive long enough. And I'm sitting here and like I should be scared. I should be scared. And then I'm like, why am I not scared? And that's what I was telling Cookie before the call. It's just price action is telling me not to be scared. One of the first things we did for the Qs, and I'm Q focused more than SPY or anything else, because I think that's our economy for a lot of things. I know there's other things. I don't want to get into that conversation. But one of the first things we did on the first week of this year was reclaim the 21-week moving average on the Qs. Right? That was one of the first things we did. And then we took off for the rest of the month. And then we spent 5 weeks, 6 weeks coming right back into the 21-week moving average. And what do? We saw buying coming in and buying in droves. And people are like, oh, it's only Apple, it's only Microsoft. I don't care. It was only Apple and Microsoft for years, and they pretty much carried everyone forward, right? And so to me, the price action is saying, hey, in 2022, we'd get to the 21-week moving average, maybe overshoot it and then get rejected by it hardcore. And in 2023, we're coming into the 21-week moving average and people are stepping up and buying. So the narrative might be whatever you want to say, but what are the people who are actually buying in the market telling you? They're saying we're going to support it right now. If that changes next week or the week after or whenever it does change, then we'll do it. But you have this massive catalyst that everyone keeps talking about, and we don't have a breakdown.
Can I just add?
Cookie, just one other thing is just like, one thing I was always taught was when the market gives you catalyst, the first thing is sell, ask questions later. Right? And so if it's sell, ask questions later, then why aren't we breaking through everything, right? Like across the board. And so that's why I'm not scared. I'm like, okay, if it changes, then we'll adjust if necessary. But right now it's all supportive, and it's been supportive the whole year.
Yeah, I mean, let me just follow up on one of the things you said, right? About Apple and Microsoft supporting, they're the ones that are supporting QQQ, and it's not fair, it's not representative of the world or the economy. But the thing is, if most of the people who are bearish out there, from what I've seen, are bearish not because of price action, they're bearish because of all the narrative and the news and the scare stories that are out there. For example, we might argue how important and significant the banking crisis is, but the spin, which is the banks are going under, people are running out with their money, bank runs, is what's driving the fear. And no matter how constructive price action looks, you can't compete with that, right? So, and a clear example of that is, so you talk about Microsoft and Apple. You mentioned Microsoft and Apple being, one of the reasons people say you can't trust the Qs. But it was the same Microsoft and Apple that were in the index that saw QQQ underperform SPY last year. So you can't cherry pick when it makes sense and when it doesn't. So QQQ underperformed last year and is outperforming this year. It's the same index, it's the same components, right? So
and the weighting for Microsoft and Apple is extremely high in SPY or the Qs, right? So.
No, I'm just pointing to the inconsistency in the arguments, but I understand why they might want to say that. People will generally look for arguments to support a bearish bias, which is not based in the charts, right? And then when you come when you show a chart, then say yes, but because of this, but it doesn't really make a lot of sense. Now, again, I'm not discounting that the market could turn to shit overnight and over the weekend, and next week we'll come back and living in caves again, right? But I mean, I'm with GP on this, at least for now. I don't really see anything that wildly different to what we saw during the last 6 months or 9 months of from the summer of last year. And if anything, QQQ is at the highs of the month. I mean, look at that.
I think me and Bags got into a small tiff on. We've been sideways since May. I was like, we've literally been sideways and it continues to confirm we're nearly a year in, and we are exactly where we are, maybe give or take a few percentage points. And yes, a lot of damage underneath, but the index is exactly where it was last year. Right? So all your sentiment, all that stuff, right now the price action doesn't reflect it. It reflects a, to me, neutral to bullish, if you're going to be bullish, which I am, scenario, but it's neutral ultimately, right? Because we haven't gone anywhere.
Yeah.
And every time we get to a level, in come the sellers, and every time we get to a level at the bottom, in come the buyers, right? Like it's just everyone's playing the range, and then one day the range will break.
I think we're closer to that end game now.
Correct, and that's what I noticed yesterday was like and I've been doing something that I don't really like, which is following flow, right? Because flow, I think, distorts a lot of stuff, but ultimately that's what the game is. And one of the things I noticed yesterday was we were positive gamma for the day yesterday, and we swapped from being up like 3 or 4 billion gamma positive to being down 6 and then 7 and then 9 and 10. And almost every single time, and I think it is every time over the last 6 months, that gamma has caused us to flush at the end of the day, right? Because it's just the flow. And yesterday we did not. That was one of the first days I was like, holy crap, we have negative 11 gamma. Everyone get ready for the flush. And then we didn't flush. So like that, so those are the small things I'm saying, not saying it's going to change overnight, but that was interesting to see. Like in Janet's, one day she's good for the banks, one day she's bad for the banks scenario. I was surprised to see that, right? Ultimately, so.
Yeah, well, I'm a bit incredulous when it comes to like news stories, and I think price action is, I don't know, predetermined, has destiny, it certainly has inertia, right? I mean, otherwise we wouldn't follow moving averages.
Yeah. Right.
So if there's inertia, then you can track what's happened historically and come up with reasonable inferences to what might come next. And QQQ, for example, even though it's been in the sideways range, it's allowed the moving averages to heal. And we talked about this on the call, I think, last time as well, where things just take time. And if they're not breaking down and they're going sideways and the moving averages are starting to improve, then it's certainly more half full than half empty, I think. I mean, you can't discount, again, what we talked about on the call last time, a catalyst which appears, which derails everything. But for now, I certainly see it. While there is the risk that we have another cycle, and it throws everybody around, I don't know. I think we're less likely to see that. And I think the fact that if we start thinking about the macro environment as well, we're certainly at a slightly different place now than we were 3 or 4 months ago. There is talk of interest rates peaking, for example, right? Which wasn't the case 3 or 6 months ago. So there's certainly something different in that.
But TNX has been showing you that for months now, right? Like for at least the last 3 weeks, it's been straight down while they're in a hiking cycle, right? Like it's in the charts ultimately. And you had a bear market rally in rates, and then you got smoked. And no one wants to think it's a bear market rally because it's the narrative right now, right? But the same narrative last year was it was a bear market rally in the Qs, and that was right. And that got smoked. And so you're in the same kind of boat, but on the macro environment that everyone's so strongly one-sided on.
Well, and you still have all the recession hawks out there too, right? Like, because we're not in a early 1900s depression style era in a recession, then it's got to get much worse. And Cookie, I think one thing that you always like to show is the patterns of the market. And while it may not be analogs from, let's say, what's happening now to 2007 or 1987 or what have you, the market does follow some patterns, and we should be aware of those, but it shouldn't be to the point where all of a sudden we make every comparison to the most extreme versions of what these analogs could be or could show. Is that fair?
Yeah, that's fair. I mean, I think one of the things that many people overlook are analogs from last month.
Right.
Right. So I mean, we talked about cycles repeating every 3 months. And so given that many people are seeing that, then why don't they analyze the cycles over each of those 3-month periods, which is what I did. Right? That's what I'm doing. So I'm looking at the cycles over each of those 3-month periods and looking at the similarities. And for example, this period, how does it compare to December, or how does it compare to October or July? And there are incredible similarities, whether it's the VIX or whether it's the SPY or in crypto. You see these patterns over and over again. And so what I've done much more of in the last 2 or 3 months is drill down and look at the micro patterns on a day-to-day, literally on a day-to-day basis, and see whether we can work out whether we can gain an edge in forecasting what the market might do on a particular day. And it's and the only and while that might sound a bit fantasy, it is actually working. It is actually working, and it just drills home again how everybody complains about the market being rigged and scam and manipulation and stuff, and to a certain extent it is. I think there's a direction that the market is heading in, and if you believe there's a scam and the market is rigged to a certain extent, then you should be able to prove it. Otherwise, you don't say that. And I think I've been able to show certainly some patterns that keep repeating over again, including where we are today. And I shared a post on StockTwits, I think it was Friday, a couple of days ago, where I mentioned that it's possible that we see the market remain rough, going higher into FOMC, tanking after FOMC, then remaining lumpy and weak until the monthly close. And that's based on patterns. So whatever the Fed said, whether it was 25 basis points or whether it was 50 or minus 100 or whatever, it was a fair chance that the market was going to do what it was going to do anyway. And I think in part that speaks to direction and inertia where the market is heading. And another thing which the market tends to do very well, particularly so in the last 6 months, is shake everybody around. I mean, just very, very few people are invited. And, that's one of the reasons why everybody's so bearish. The bulls are bearish because they're so pissed off with the price action, and the bears are naturally bearish anyway. And it's not an easy market to trade unless you start looking for patterns that might give you an edge. Otherwise, you end up just pulling your hair out. And it is a difficult market to trade, definitely. Well, anyway, I touched on lots of things there.
Well, especially for the gamblers, right, who don't look at a trade as a swing trade. They're trying to scalp. That can be really hard. But at the same time, I always like to bring in the crypto case when you're on Cookie. We look at crypto, and 2 weeks ago, Bitcoin was down at 19,000, right? 19, what was the bottom? 19,568. And now it's almost $10,000 higher than that in 10 days. And we've noted so many times how crypto and Bitcoin are a risk on asset. Well, if you go from top to bottom and you're up 40% in 10 days, and you haven't had a major pullback, which could happen, it could still be rocky. That tells me that there's still risk on out there, as opposed to, the world's coming to an end. We're going to zero.
Yeah, I agree with that.
Quick shout out to everybody who's joined us in the chat. Thanks, Seth, Rachel, Pratt. Good to see you, Pratt, Warren, and a couple others out there, keeping the comment section lively. We appreciate you guys tuning in and listening and watching. But let's pivot back into Cookie. I wanted to get back on the VIX and the SPY, as we were talking about fear. And I don't know if you want to share your chart, or you want me to just pull up the VIX in general. I'm happy to do whichever.
I can share a chart if you want to.
But yeah, I'll let you share. We see all the time across FinTwat that you can't chart the VIX, and Cookie, one thing I've learned from you and others is that like we can chart anything. It's just how you interpret or how you draw your chart. And I'm curious to see how you see the VIX right now and what you think that could mean as a possible move.
Right. Okay. Hopefully you can see this. Can you see that? This is my VIX chart.
Yep.
Okay, good stuff. Right now, well, it's the same chart that I've shared on Stocktwist a bunch of times. Some of you who have seen it shared on Stocktwist will have seen
it's the same chart you shared 3 months ago too, I think.
It is. It's the same chart. And I made this chart 2 years ago, or a year, maybe over a year ago. And actually, most of my charts are years old. And on a side note, the reason why I do that is because it stops me creating bias. So if I think I can chart something well, then just because price does something that I'm not expecting shouldn't make me want to redo the chart. But anyway, that's a discussion for another call. But as far as the VIX is concerned, so we've seen all these highs when we looked at it last time around this 30 area, right? So this is 33, 33, 33. We didn't come anywhere near. Well, we came close. We came to 29 or so on this particular episode. But one of the things that I was looking at is how the VIX tops. Okay, because it generally tends to top in the same way. And what that means is it doesn't hit a peak. It doesn't spike and then go straight down. It generally doesn't do that. You might be lucky and it does. And in fact, this example here that I'm just pointing at, this is back in June. This was the cleanest uptrend that we had in the market. I think it was this one, which was a really nice uptrend in the SPY and this during the bear market last year. And then every other rally, every other bear market rally was horrible, right? But this was really the only one. And if you look at the VIX, what it tends to do is you tend to see multiple spikes, and they can last maybe 2 weeks, right? So this is the 29th of April, finally tops on the 19th of May, right? So with multiple peaks here. And that's very similar to this. And it's very similar to this period over here. In fact, in this period that we're looking at, part of the preparation that I was doing for what came here was looking at how the VIX topped in all of these previous occasions. And what it does is it helps you manage expectations with how prices might move in the market. And we've seen how many times SPY has gone down to 390, for example, 385, 390, 390 something, but it hasn't died. And the reason why it hasn't died is because the VIX continues to top in a way that it's done in the past. Now, the VIX could get all the way as high as 29, 31, 33. And what's interesting, as going back to GP's point earlier, is if the banking crisis was as big as everybody claims it is, why didn't the VIX get as high as it did during the summer of last year or in October, right? I mean, we were talking about the fear is possibly even greater now than at any time in the bear market, but the VIX didn't reflect that. And people say the VIX is broken and you can't use it anymore, and I don't buy that, because the VIX does spike when there are problems out there. It just hasn't got as high as people were hoping for. So the VIX does react when you expect it to. So what we're seeing in summary then is that it's finding resistance at this downtrend line, which connected the peak in October. So if you think the narrative here is for the market to break down and really go back towards the October lows and the lows that we had last year, then maybe the VIX needs to take out its corresponding resistance from October as well, which it tried, but it struggled with that. It still could do it. I mean, it could still get above 26, but you can see it with each passing day, the VIX spikes are getting a little bit weaker.
Yep.
So let's see. I mean, let's see where it goes from here. But that's certainly one of what I've been looking at, and what it did as far as trading is concerned. Because in the end, what's important is it's all fine analyzing a chart, but how do we trade? How do we trade it? And for me, it was, well, if the market weakens and the VIX doesn't break out, then we'll get buying opportunities. So just like last year, when the VIX got to 31, 32, you buy whatever you wanted to in the market. Right? Everybody's like, oh yeah, you probably get a bear market rally when the VIX gets anywhere near 32. This time around, it's probably somewhere around this 26 to 28 level. So as the VIX gets higher, we're looking at it as an opportunity. Like we might get even as high as 31, 32, but if the banks aren't able to do that, then I'm not really sure what is. And then we start thinking about additional or new black swans and events, things that might break in the system that might cause that. And right now, I can't think of anything. Unless
Yeah, I
it's
mean, just the resiliency that the market as a whole has displayed, from all the crypto institutions that went under to now the banking institutions. Again, GP's brought this up, like it was on US Treasuries that sunk some of these banks, and it just makes it, sure, there could be a black swan event, that's always a possibility, that's always out there in the universe, but the amount of damage that has been done from the collapse of some of these institutions, and we still haven't had one of these major VIX spikes through resistance. That's the reason. That's one of the reasons why, from the macros perspective, like it's hard for me to be as bearish as I was 3 months ago, the last time we talked.
So just one thing I want to add is like, banks in general, right? Like, so they usually have pretty good risk management overall, right? I was actually reading about M&T Bank. They actually do not take any of their deposits and put them in these long duration assets because they saw the risk of putting depositors' cash into assets that were paying 1.5% interest at historically low interest rates. So like, it was funny reading, and MTB's this ticker symbol, it still got thrown out with baby with the bathwater, right? But there was banks that were aware, and I think a lot of people were like were like, interest rates can't stay artificially long as they've been, right? There's going to have to move up. So to buy into long duration treasuries at like a 1.5%, 10 years out, just like didn't always make sense to everyone. So it's definitely an issue, but these are unrealized losses, right? Like, if to me, my logical brain says this makes no damn sense, right? Ultimately, and maybe I should be scared, but until I get the brain thing that says, dude, this is actually something you need to worry about, then I'll probably, and then obviously the price action we've talked about on this call is saying your logic kind of makes sense.
Yeah. The thing is that the fear of the banks, it only materializes if there's widespread fear in the general public that their money is not safe. Otherwise, that fear doesn't make sense, right? And you can put the mismatch with long duration and assets and all the rest of it. That only becomes a problem if people want their money back. And people only will want their money back if there's fear that they'll never see it again. So that's where we start going back and saying, well, maybe there's just media's partly to blame, and the opinion leaders and the VCs and all the rest of it. We can talk about that, but there was just insane fear that was created, which in turn led to a problem that I don't necessarily think it was really a problem there to begin with, but I don't know.
Yeah, I don't think so either. Like, and as we were talking about Cookie, like, I don't like talking macro because as soon as someone like a 0.25% smarter than me starts macro, I'm just gonna shut up because I'm terrible at it. But outside looking in, I don't see how risk-free assets like U.S. Treasuries caused the collapse of 2008, when 2008 was worthless paper, leveraged 11,000 times over after the fact. But during 2008, no one knew how crazy leveraged it was. So they couldn't value the assets. So what happened when you can't value assets, you bring everything down to zero, which is basically what happened in 2008. And you're telling me this is exactly like 2008 or very similar to 2008, and I don't buy your bullshit, right? Like, that's ultimately what you have assets that if you hold, like, can you imagine telling a individual investor who bought U.S. Treasuries, be like, you just hold this, you'll be profitable in 10 years. But if you don't hold it, you're gonna have to take a 50% loss on your on your savings. You're like, huh? What? I guess I'll just hold it 10 years, right?
Right.
And that's kind of what's happening here. And I get it. Banks are different than individual investors, but it's just the logic doesn't make any sense.
I think, just going back to the VIX, I think I was already prepared for this breakout. If we broke out above this area over here, then I'm marking, areas where I think the VIX would go. All right, so 38, 44, in case there was major trouble. And these peaks would be way above the levels that we had in 2022. So this would be a significant move, obviously, right? So I was prepared for that. So I'm not discounting, as neither of you two are. We're not discounting that the world could turn to shit. We just need to see, signals and signs in the charts to support that. We just haven't seen it.
But that I guess that goes back to the original point. But in addition to, is like, you would have seen that immediately. You would have seen epic price selling off of something like across the board, right? Like, yeah, we got back down to support levels, right? Like, you would have seen a major breakdown, because if you were that worried about 2008 crisis and banks going back to zero or insolvency, like SIVB or SBNY or any of these regional banks, then why would you hold any money in any of the banks at all, right? Like, you'd be just selling, be like, hey man, I've had a good 10 years. I'm going to just take my profits now, right? So that's the other thing that I didn't see, which was like unabashed selling. Except for regionals. There was regionals, but across the board.
Well, I mean, you had like Schwab got hit, which to me doesn't make a lot of sense, because they're an investment house, right? They're where you keep your money and we invest, right? So Schwab getting hit the way it did doesn't make a lot of sense to me. It's not like they have, all kinds of mortgages or auto loans or these other factors against them. But yeah, in general, it's just kind of peculiar how they took everything that could be a bank or is labeled a bank out to the woodshed.
Well, there you go. Fear is rational, right?
Even JP Morgan, right? I mean, JP Morgan's not down as much as a lot of the other ones, but it's still well off its highs, and it's at its low today.
Yeah, I find that interesting today that the big banks are actually the ones that are weak compared. Like, I believe regionals are green today, right? KRE,
Yes.
the ETF, it's green, yep. And I'm like, what? And then Goldman and JP Morgan are now selling off, and I'm like, this just seems like a big rotation to me.
Do we have any questions from our? No, everybody's just commenting. Cookie, one thing that we like to do normally on our Sunday show is just some things that we like out there, things we're watching. Anything that you particularly like or watching out there right now?
I mean, I'm really boring when it comes to picking names. I tend to watch the same things over and over again.
Yeah,
all the time, right? And we can argue whether that's the right approach or just an approach, but I tend to look at the same tech name, the same sectors, the same indices all the time. And the reason why I do that, or the reason why we do that as a group, is because there's trading opportunities in everything. So all we're looking for are things that we can trade irrespective of the ticker. And having said that, the starting point is a basket of leading names. So we'll always try and find the leading stock in any sector. And then we won't change that. So whether it's, for example, AMD or NVDA in the semiconductors, we'll just stick with those. We won't look at all the other names in that space. And so we'll have Tesla, Apple, so all the names that have, basically just the leaders, right? And then just trade those, because whether Tesla's going up or down, you can trade it. So rather than moving from one stock to another, we'll just find trading opportunities within the same group of names that we follow for months.
Which that's one thing that I've done more so over the past quarter is basically I put together my fuck around 5 is what I called them. Apple, Tesla, NVIDIA, the Qs, and SPY. And if I can just pay attention to those 5, I have plenty of trading opportunity in any of those 5 names. But I specifically asked you that question because one, I knew NVIDIA would probably be in that list that you always keep an eye on and the move that it's had. But also another name that got hit yesterday, Square or Block, a name that you've liked in the past, and what you think about that price action on that after the Hindenburg report that they're short and Cash App's a fraud.
Okay, good. I can talk about both of those if you want.
Sure.
Can I say one thing about Square and Coin before you start talking?
Go ahead.
It's funny how the Hindenburg short report has more power than the SEC Wells notice on Coin.
Right.
I just find it hilarious. Coin sitting here green and Square still sitting near yesterday's lows. Anyway, continue.
It's all rigged, man.
The market just makes me laugh sometimes. I'm like, yep, SEC is still stuck and everyone knows it.
Okay, so a lot of people pulling their hair out with NVIDIA, and and I can understand that. It was the same with Apple after COVID, for example, where Apple would go up every day, every week for like 3 months. Well, actually, everything went up, right? But there were certain stocks that were stronger than others, and Apple was one of those, I remember. And so now it's NVIDIA, which everyone's oh man, it's up for 15 days in a row, or it's up for 2 weeks or 3 weeks, and I can't. And so rather than looking for opportunities to buy in, they fight it. And it's very frustrating for a lot of people. So I can share thoughts on NVIDIA just very briefly, right? So this is based on a monthly chart, which is a little bit more complicated, but I think it does a much better job at just highlighting the bigger picture for this particular stock. And one of the things that I always do is whenever I'm looking to try and evaluate current price action, this is monthly candles, by the way, so it goes all the way back to when it was born in 2000. Well, I don't know whether it was born before that, but it goes all the way back to the year 2000. So trying to evaluate the current price action here, the first thing I do is see, well, is this consistent with moves that it's done in the past? That's always my starting point. And so when you look at this move, which is, so this is from the October lows, there's been a couple of months where, there's not really many wicks and tails on the candles, so they're quite strong months for the last 3 months. And they say, well, how typical is that? Well, it actually is very typical. NVIDIA does that all the time. So following COVID, so from 2019, it did this. And the slope here is very similar to the slope back in 2019. It's the same as the slope back from 2015. It's the same as the slope over here, over here, over here, going all the way back to the year 2000. So, the question that I ask myself is a 4-month run exhaustive for NVIDIA, or could it just be the beginning? Well, when you look back at the previous case, they said, well, actually, chances are if it's already done 4 months and the moving averages look the way they do, remember now we're weaving the idea of trends. So you've got the 9-monthly moving averages curling up, not that different to this period over here. So that's why I've circled these areas in yellow, because they're showing the same trend here. I'm showing the same trend here as this period over here, where you've got the 9 below the 20, right? 9 is curling up. We bounced off the 50, we bounced off the 50. And this went on for 2 effing years, maybe more, because I can't count, right? What's that, 2019 to 2021? Yeah, okay, a couple of years. So while this could end here at this trend line, and it could, I mean, you could say, well, it might end at 280, it could. But while the trend remains supported and we're putting in strong candles, there's no reason to suspect that it won't continue going higher from here. Then you start weaving in the idea of the fundamental story, which is AI. And would it make sense for NVIDIA to do a run like this at the beginning of what could be the run in AI? Absolutely, it does. So whether you look at it from a fundamental point of view or a technical point of view, there's no reason why NVIDIA should stop here, given what it's already done in the past. And this follows on from a 15-year consolidation from the year 2000 to the year 2015. So, it gives you a little bit of perspective that, well, it went nowhere for 15 years, and now it's 5 years into what could be a run, which, it might not last 15 years, but let's see. So and this is why I like this stuff. This reminds me a little bit about what Tesla did. And I was thinking about this over the weekend, and I mentioned this on Stock Twits that there are certain similarities between what NVIDIA could do and what Tesla did. Now, Tesla went nowhere for 5 years. And when Tesla took off was when they first convinced the world, because they promised it for many years, they finally convinced the world that they could commercialize an EV. That was it. So once they were able to convince that they could actually do it and make a profitable EV, that's when the stock took off. And that's maybe what we're seeing over here now that we're at the doors or the dawn of AI. And it's not really a fad. It was a fad over the last 5 years, but I think we're now starting to see real applications. I mean, here, for example, in my toolbar, I've got what is this? It's called Perplexity. I'll just plan this. So here, ask me anything. Tell me about NVIDIA. This is just off the cuff, right? I don't know what's in there. I can refer to two different things. One is a sticker to another. So here you go. So this is just a plug-in of my Chrome, my Google Chrome toolbar, which is AI. And then I can click on here and it'll take me to other places and the sources where this information came from. I can summarize this page and you can all sorts of fancy stuff. But the point being that a lot of the detractors of NVIDIA have no clue what's actually happening. There's a lot of stuff already that is real use cases for AI out there right now. And I think if they open their eyes and actually looked a little bit, then apart from the chart looking sectors, there's actually a case there for that AI might actually take off and do it. It's going to change the world. And I think this is just the beginning. So I don't know. There you go. I touched on a few different angles there and why I think NVIDIA is going to go higher. Yeah,
I love NVIDIA. It's one of my favorites. I sold out on a nice little profit, but I'm still long via Soxel. So I like having the cohort. Don't disagree that NVIDIA and AMD are leaders. Huge position in AMD for me. But we also wanted to get your thoughts on Block or SQ.
Okay.
GP hates NVIDIA, by the way. He thinks it's overvalued and it's going to zero.
It probably is. It's probably right.
Yeah, I'm just I'm just laughing because you keep shorting, not you as in YouTube, but just the general market, and it keeps proving you wrong. And I get it. You'll someday be right, but you also said to short at 210, 220, 230, 240, 250. Oh, there's an offering. It's the end of NVIDIA. What did it do? It smacked you right in the face, right? Like it literally just said, yeah, $10 billion offering. They probably needed to grow. This makes total sense. We're going to buy this up. Like, can you like that? How come that's not the narrative here, right? $10 billion is a lot from an offering perspective for a company that only makes 30 billion in revenue a year, right? So like perspective is like, holy crap, maybe this is an investment in their technology and this is just the start of a cycle. And this is, I've been talking about the waves, right? I think a lot of people, Cookie, this is a bit different from what bit different, but the same is, I think a lot of people are looking at the prior action and saying, well, it can only retrace this much. And what I'm looking at is that 2022 was the great reset, right? Everything, literally NVIDIA, Tesla, except for Apple. Apple is just the anomaly. Across the board, Roku, Square, everything reset back to 3 to 5 years ago. So you essentially have a new cycle starting, not a retracement here, right? So that's what I've been showing it with NVIDIA is like you had this massive wave one move up from 108 to 200, right? Like literally 100% move, came back and retested the 61 retracement, and it's been straight up. This is the wave three, as they talk about, the relentless, like, so my views on charts now are not retracements of the prior few years, but more so of the beginning of a new cycle. Mm-hmm. And if it's the beginning of a new cycle, you have a different perspective on how you see these things. And you kind of, how do you not see it as a beginning of a new cycle when you literally have, what was it, Tesla straight down 200 points and people are like, well, it's moved up 100 points. That's too much for Tesla. And you're like, well, it just moved down 200 points without flinching.
Yeah.
On the basis of Twitter, right, or whatever narrative they were using. But if you can have it one way, why can't you have it the other way? And Tesla was also just one of the only tech companies that was growing at 40-50%, and they still sold it down. So to me, it's how I'm viewing charts now. So maybe if you're looking at charts and you're out there, be like, what? How do I decipher this? Maybe take a look at it from a different perspective, right? I think that will help. And like, look at the longer term pictures here, because I think that the narrative is what the narrative is. But you know, maybe Kathy Wood is right. Roaring 20s is coming. It just hasn't started yet.
Yeah, maybe. Hey, let me something very practical that might help some people as well with trading this. Sometimes people ask me about price action and how you can come up with different insights and inferences to how price might move. Here's one which is relatively straightforward that anybody could try. So if you look at any bullish trend, you will typically see higher monthly lows. So take this one over here that I'm pointing in the middle of the chart. So you see high monthly lows. We'll come back to this one in a second, which is lower, right? So you've got high monthly lows for literally many months, and then that stops. You get it again, right? So over here, you're seeing high monthly lows. And I know, GP, you look at this as well, right? With QQQ, for example. And you notice that this month had a lower monthly low than last month for the first time in, what, 5-6 months? But,
yeah.
Right. So just following on that thought, what tends to happen is a strong bullish trend will have higher candle lows on whatever time frame you're looking at. So higher lows over here. But the first time it starts putting in a lower monthly low, it generally tends to lead to the 9 MA on that time frame.
Correct.
Right? So you see, so basically what it's telling is that the strength of that trend is weakening, but then it's going to hopefully it will try and find support at the 9 MA, and if that doesn't happen, then at the 20 MA. Normally it's the 9 and the 20, right? I know some of you will use different durations, but I'll use 9 and 20. So as far as this trend is concerned, while it continues to hold higher monthly lows on the candles, then that's your sign that the best you're going to get in the next month, in the month of April, is this month's low, which is 223. So already you can be planning for what might be an entry point in April. If the market was weak for whatever reason, it would be somewhere above 223. I mean, we've almost closed the month now. So unless things tank and we end up going below 223 in the next 3 or 4 days, let's assume that that's the monthly low. So in April, look for an entry point above 223 and take it from there. So rather than trying to short pullbacks, embrace them as long as we hold the monthly lows. And if we were to get a monthly low lower than the previous one, then wait for the 9 MA to catch up and the consolidation which would open, which could last in this case months because we're so far away from the 9 MA, right? But and you end up with something like this, a 3 or 4 month consolidation until the 9 MA arrives. So that would be how I would trade, from a very holistic, very top level view, NVIDIA in very simple terms, without trend lines, without channels, without fancy shapes and stuff. Look for the high monthly low, and once that is lost, then look for as close to the 9 MA as you can get, even if that means 2 or 3 months wait, something like this period over here. And that could be a trade plan for the next 3 years on NVIDIA.
Yeah, I think also, like, if you're looking at the SPY, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 straight months, pretty much right at the monthly 21 moving average. This was an exact 50 or 61% retracement. Like, if you're looking at cycles, right, like on a monthly time frame, this was an exact retrace, 50 or 61, I can't remember exactly, but I posted the chart a while ago, of the COVID move low to high, right? To all-time high. And so you have this kind of basing pattern that's happening right at the 21 month moving average, 20 month, whatever you use, it doesn't matter.
Yeah,
it's similar.
Yeah.
And it's going above, going back below, going back above, going back below. And what, to me, it looks like it's essentially a rounding bottom, right? Like, if you're looking at the chart that you have here, that to me is a rounding bottom, and you have the moving averages curling up except for the longer ones because they're now catching up to the downside, right? So, but the short-term ones are starting to curl up. So part of the rounding bottom conversation is this may take a few more months or another month or whatever, but this is ready for a launch pad status to me, right? Like this is that it's just the way I see it, right? Like, and until price action, like we in the next 3 days we fail miserably and we break all prior lows, then that's a different conversation. But right now we are coiling, the ranges are getting tighter, as you can see as well, right? On the monthly pattern here. So this is all in, and this is in the backdrop of all the macro stuff that everyone is so worried about, and we're sitting here in a fairly tight range. So like to me, it's what doesn't break out breaks down, what doesn't break down breaks out, right? Is my general thesis here. So I personally think this is a beach ball underwater at some like in the next couple of months.
The longer we talk, the more bullish the market's getting. We started off and the Qs dropped about 3/4 of a point. And now we're positive since we started the pod. So that's all because us bringing this positive energy back into people's sentiment.
But look at regional banks today, right? Cook, if you just bring up the 5-minute regional banks, this is it's leading, right? It's leading into Friday.
What's that? Is that KRE?
KRE, yeah.
Okay, one sec.
You don't have to. It's not a big deal. People can see it on their chart. I'm just saying, like, this is now leading, right? We went to relative strength in the Qs intraday to relative strength in the small caps, right? So, you don't typically see this if the world is going to collapse. Just my 2 cents, but I'll stop jabbing.
Let me just comment on something before. Oh shit, that's the wrong one I want. Hold on, let's go over here. Oh, here, let me just go back to here. This candle here, this monthly candle is a typical FU candle before a change, right? And you see that in crypto all the time, right? You'll see long tail, long wick, tiny little body, price goes nowhere. And as you said, with everything that happened this month, with the rate increases, with all the banking crisis and everything, and that's what the candle looks like. And that's not indecision. That's just everybody taken for a ride. That's because the market is driven by options traders, right? So everybody loses out. And this is why I've been posting on stock tips recently as well, is just wait for the monthly close and then buy in April. Let all of this play out. And then if we're still alive and we're still not living in caves and stuff, then just buy on 1st of April. And chances are that if the market is going to go higher, you won't have missed anything. And I think, sometimes what happens is people's addiction to trading gets in the way. You just want to trade because you think if you're not trading, you're not making money.
Agreed.
Right? If you're not trading, you're not making money. But the thing is, there are easier trades and there are easier times to trade. And this week wasn't an easy time to trade. Can I continue talking, or you want to add something?
Yeah, no. I oddly like this is probably for me. I've been pretty kind of just sitting on the sidelines, even on trades and stuff. I do maybe one or two a day at the most, if not some days where I don't do any at all. And this week has been one of the most active weeks I've had in well over a year, right? And that it just me, I think the price action is actually looking inherently better and giving you all types of opportunities intraday, but this volatility usually sparks a change, right? That's usually what happens in terms of movement. So you're getting volatility to the downside, but there's no follow through. So
I really like the commentary of the beach ball. I feel like that's very apropos of how I feel the current setup and sentiment and chart looks to me. Right, you pull that beach ball underwater and you let it go, and it whooshes higher, right? And it doesn't go out like a rocket ship, but it forces everything up with it, right? Like it's all coming up. And I think that's a great way to look at this as we started the pod off here. it's a very apt way of looking at this cooling coming into several weeks. This is the third week of quote unquote cooling after several weeks of being at near exuberance. So you quell that sentiment a little bit. You keep the porridge just right, as I like to say.
Mm.
We got one request in the.
Oh,
I'm sorry, Cookie, go ahead.
I was just going to say, can we talk about XBI? Because that was one of the things you wanted to talk about as well.
Yeah, we can talk about that piece of shit.
Come on, it's not that bad. Well, actually, it is pretty terrible.
It is pretty bad.
Let me put up XBI, right? And the thing is, I mean, it's so I had this chart. Fuck, it looks terrible, even worse than I thought.
There's not a lot to like there.
Well, no, there isn't a lot to like, but the only thing I would say in its defense is it's done this before. It always does this. I mean, if you go back, I mean, and it's worth pointing out. So look at my little red arrows here, right? So this is clearly, piece of shit price action over here. But following the breakouts, look what it did in 2000 and something, 2016, right? It breaks the downtrend channel, hits the 20-month moving average, and then dies, literally fucking falls to shit, right? But it doesn't take out the previous lows. In fact, there's a trend line that connects these lows. Let me do that live, show that I haven't fixed this, right? Like there somewhere, right? So if it went below that, I'd say, well, you know what? Pack up your bio bags, Mr. Bags, and it's game over. But it hasn't gone down there, right? So this precedent. So this is what I mean by this precedent. So it will shake out people even after the breakout, and to a certain extent, this is what SPY did. So SPY did this, but not as bad, and QQQ did this, but not as bad. So the reason why biotech is doing the same. So this is my point. It's doing the same as everything else, but it's just more exaggerated. And the reason why it's more exaggerated is because the moves up are more exaggerated as well. So it's like a shit coin. I mean, literally,
yes.
It's like an absolute shit coin. So you buy some crypto, and they'll have wild swings relative to Bitcoin, right? So you buy your graph or whatever you like, right, or a dot, and they'll do 50x. Like XBI will, or some of these individual biotech names, they'll do 50x or 100x, just like the shit coins. But then on the way down, they'll lose 95%, just like XBI relative to SPY. So this is doing the same as what it did back in 2015, and it did the same in 2009. And again, you can draw a line here and you say, well, look, it did exactly the same following the breakout. Below the 9, so it rejects the 20 MA, goes all the way down through the 9 MA. And this candle was horrendous. Look at that for a horrible candle there, not dissimilar to this one. So one of the things that we were looking at over the weekend, and one of the things I was suggesting to the group is, if you like biotech, let the month close, and no matter how shit it looks, buy it on the 1st of April. If the market survives into April 1st, that's when you buy XBI. Right? I mean, maybe it could go down to 68. And it might, the thing is, 72 actually is a weekly support. 72 is a weekly support on my chart. But so that's why it stopped about there. But it's okay even down to 69, and it will be the same as what it's done over here. And notice as well, after this huge shakeout, it reverses completely. The same over here. So there's no fundamental reason why. It's all price action. There's no fundamental reason why price would tank like that and then reverse the next day. Tank like that and then reverse the next day. Tank like that, reverse the next day at the beginning of the month. But it might well do the same again. And so far as cycles are concerned, it's playing out a 5-year cycle, just like Soxel. See the 5-year cycle. Oh, hold on, let me try and draw that over here. There you go, like that. And it's doing the same over here. It's just a little bit bigger, right? Like that. You've got the same type of price action, boo, 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 like that, boo, like that, and eventually it'll go up to 400 or something. I mean, we're going to need drugs, man.
I'm going to need drugs. So I'll keep.
You're going to need. If you're holding it, you're going to need drugs. But the world needs drugs, man, and medicines. I mean, it's not going to disappear, right? They're just paying back all these excesses. It was the same over here. You get these insane excesses in biotech in both directions. That's why I say it's like a shitcoin. And once that's the basis of your expectation, then you don't get disappointed. You just either buy very little, or you really wait and really wait but you don't put all your eggs in that. And I know you didn't do that. But.
Just when I thought I was out, they pulled me back in.
So, when you're talking about this, Cookie, I think for me, what I'm also we're in early 22, late 2021, the risk to reward to being in the markets didn't make any sense, right? Like tech was peak earnings and all this other stuff that was going on. Forget the Fed, forget anything else. COVID brought forward a lot of demand, right? And it just, so everyone knows that story. I'm not going to harp on it, but we're sitting here nearly 2 years later from that kind of moment where we had peak growth in tech and everything else. And I think like a lot of people want to be scared. They want to get that rug pull and they want to get those 1,000,000% wins on puts. Not going to happen unless you're 0 DTE, right? Like if you're buying a month's out, unless you have a catastrophic stuff, it's just not going to happen, right? Bear markets, disasters don't happen immediately. They happen over time, right? People need to get out of their stocks for things to collapse. So my general thought process is, why aren't you like, do you want to put money into a treasury at 5%, or do you want to put money into the markets where your risk to reward is inherently better, in my opinion, than when it was 2 years ago? So, and your downside is fairly limited here, right? Like, let's take Amazon, for example, which has been garbage. It's sitting at 97, right? 96 is kind of like the big support area that's been for like the last 5 years or whatever, or 86. Let's take 86. You have a 15% move down versus a big upside if the markets start to move, right? Like, so I think the risk here to reward is inherently better when it used to be. And you're not, if you bought Amazon at 3,700 or 3,600, you're sitting in the crapper right now, right? But if you waited till it got to like 26, 2,700 and then it did the split, whatever, you're in a much better position. You're like, yeah, you're slightly underwater, but you're not in a terrible position. And here it's even better than that. So yes, can it go down 60%? But you can have stops to stop you out. Go back to cash. Because that's one thing that I tell everyone is, if we have a catalyst, go to cash. It lets you think clearly, right? And gives you cash to redeploy when you think it's the right time.
Yeah.
So that, I think that's the thing that continues to stand out to me, is that you have risk to reward. Maybe not in Apple, maybe not in Microsoft, but a lot of these names that are still doing really well, considering all of the macro backdrop, is that you have maybe 10% to the downside and 100% to the upside in terms of right risk reward. And this is a probability game ultimately.
Yeah. And they've all done the same sort of thing. I mean, sure, they could fall apart, right? But like you said, you can use stops and get out. But I think the risk reward, like you say, as long as you define the trade and you have discipline to get out, if it doesn't work out, then you're certainly better off buying over here, and you're better off buying this month than 3 months ago.
Yeah.
Right? This is the second attempt. Right? So I mean, I actually bought here. I actually did buy 3 months ago. I bought the first touch of this uptrend channel in the low 80s or mid 80s or something, and then I sold some of the way up, and then I held the rest of it, and I'm still holding some, not much.
Yeah, I added to my Amazon position too. When it hit, what was that, 2 Fridays ago, when it was like $90, something like that. So that looked like a pretty good spot for me. I was eyeing those 80s, but I wasn't going to wait on it for $5 on Amazon. Hey, Cookie, I know we're at time. I hope you got just a few more minutes for me. We did have a request for Baba. I know both GP and I like Baba a lot, and I know you've liked Baba in the past. If you could share that one maybe, or talk about it.
Yeah, I can do that. Let's see, what's this? Baba for ST.
And hey guys, I want to thank everybody for joining. We've had a great turnout on the pod today. But always please like, comment, subscribe for us. That helps us get seen and picked up by other people who might enjoy this type of content. So while you're waiting on the Baba chart here, go ahead and like, comment, and subscribe for us. That would be a big favor.
Okay, cool stuff. So let me share the chart that I shared on StockTwit some months ago, just so there's some consistency there. And so Baba brought the downtrend channel. Everybody thought the China story was awesome, And like with many things, whether it was Netflix or others, they rejected the 20 monthly moving average and went back down, right? So this, price does that. This is the thing that a lot of people just don't get, or they don't want to get, is that price tends to do the same things over and over again. So when price goes through a 9 MA, it'll often find resistance at a falling 20 MA, which sends it all the way back to the 9. So this isn't unusual. This isn't because of Baba or because of China. It's just price does that. But what's important is what it then does next. Now, what you want it to do is you want it to remain outside of this downtrend channel. You don't want it to go back inside there. Right? So these are the pivots that I shared, written. So this is a couple of months ago. This is in February. So let me put this up here. So let me put the March pivot up. Sorry, the April pivots up. Let me just update that. So these would be the April pivots for Baba. Right, so let me just put this like that. So this is what I'd be thinking about now, right? So clearly what you've got is you've got some support here, stopping price going back inside this downtrend channel that I mentioned. Now, what you look for in a trade when price bounces off support is, does it retake a lost support that it fell through? So if price bounces at a support area, does that bounce retake a lost support? Otherwise, it just becomes a back test, which could fail and it sends it back down again. And this is what a lot of people tend to miss or overlook. They just get excited about the wick. They get excited about prices moving higher. So what I'd be looking for as far as Baba is concerned is, and I don't know whether it's already done this, it might have already done it during the last few days. I'm not sure because I don't check it often, but the 9 monthly moving average is 87.6. We're currently at 86.3. So the question is, has it already attempted and still below the 9 MA? But to make it simple, what I'd be looking for as far as
to answer your question
April is, will it be able to, hold on, let me put this pivot here for April instead. So that would be the support for April, which is 79, but I'd want it to hold, no, the 9 MA is going to fall. It's still falling, right? So in April, the 9 MA will open below where it currently is, right? So that's one of the tricks that I'll look at as well is, the inertia of the moving average. So if the 9 MA is currently 87.5, it's likely to be lower next month, given the look of the candle right now. So it's still possible that when the April candle opens, it opens above the 9 monthly moving average. And then what I'd want to look for is, does it hold the 9 MA as support? And the worst case is, does it hold 79 as support? And you get what would end up looking like a double bottom over here. But I'd want it to hold 79 in the month of April and then build from there. Now, from there, if it does, then clearly it's got to get back above the loss supports like 92 and then up to 117. But that's what I'll be thinking about as far as Baba's concerned. Below 79, it'll probably look a little bit rough, but that's still quite a way away. It's like 10% from where it currently is. Does that help?
Yeah, it did try to clear the 9 MA today, by the way.
Okay, all right, got it.
Sorry, I lost my mute button.
I think ultimately I'm in the same agreement with you. Is like, it's going to take a little bit of time, but once it starts ramping up again, it's going to be a lot cleaner, right? This is the let's see who's got the cojones to stand by phase.
It takes time to correct monthly, falling monthly moving averages. It takes months, right?
And Baba's fall was disgusting, right? Like compared to everything else, it was just vomit, right?
Right. 2015 was horrible. 2018, 19 was horrible when it was below the moving averages. It just takes months for it to get back together again. Right?
I'm still in my $84 puts to open. I'm not looking. I don't think that it will close below $84 this time next week, but we'll see.
Yeah, and I think that's the one thing when you talk about time, right? Yeah, we've talked about it before as well, and I think that's the important part is like you have massive technical damage on the charts and prolonged massive technical damage. It's also going to take prolonged massive technical breath to move back up. And we also have a regime shift, right? From free money to more expensive money. So as you're getting the technical damage to repair, the same stuff that was popular back then, outside of maybe a handful of names, are not going to be on the ones that are running because people are shifting their asset allocations, right? Because you can get 5% in a treasury account, then why would you put money into Fubo, right? Like it's not going to happen. So people are getting more conscious of how they allocate their money as well. So that all takes time. That shift from where your assets were to where they will be 10 years from now. So people are not just thinking about the next 5 months, but they're thinking about long term. So how do we build for that? So I think that's also part of why the technical damage takes so long to repair.
Yeah, I agree. And I think, it's also important for people to, when they're planning on name, BABA might be really good for trading short term, but it might not be great as a long-term hold yet. Right. And that might apply to lots of things. So, just on your point. So, decide what sort of animal you are, or even if you're a mix of those two. So if you want to buy BABA for the long term, then you just be prepared to wait it out a little bit longer, as long as it holds support, give it that time. But in the meantime, these candles are great to trade intra-month, intra-week, intraday. There's great movement on these candles. And it's like many of the tech names out there, whether it's Tesla, AMD, or some of the other names, which have really nice weekly and monthly candles. So whilst you're waiting for that damage to repair, you can still trade them short term if you want to do that. I don't think it's a bad name for the long term. Let's see where it goes.
Agreed all around. Hey guys, we wrapped up. This was a 70-minute show. So I appreciate Cookie, the quarterly update. We'll get ahead of next quarter and be ready for summertime here in the States. So and I think GP is going to come back to Atlanta. Maybe we can work it in where it's a live session with GP here and maybe even Nick and Cookie abroad. I doubt you're coming to the States, but that might be cool if we could work that out in the future.
Nice.
But really appreciate you as always, Cookie. Thanks so much for your time, GP. As always, just appreciate you always being here while we rock these podcasts out. Thanks everybody for tuning in and watching our midday session. We haven't done one of these middays in a while. So it was good to be in the middle of a trading session. It looks like we're still experiencing. Hey, look at that! The Dow just went positive not long ago. So look at us influencing the market with our podcast here. But thank you guys. Thanks for everything. Thanks for your time. And GP and I'll be back on Sunday with another live weekend TA report. But that's it for today. Thanks.